So, is your mortgage coming up for renewal in 2025? If it is, you're about to make one of the biggest financial decisions of the entire year. Now, the stakes have honestly never been higher, but neither has the opportunity to save a serious amount of cash. So let's break down exactly how you can navigate this and keep thousands of dollars in your pocket.
And if you're feeling a little bit of that pressure, well, you are not alone, not by a long shot. A whopping 1.2 million other Canadians are right there with you staring down a mortgage renewal in 2025. This isn't just some small trend, it's a massive financial wave hitting homeowners all across the country.
And if you're one of them, you know the whole landscape has just completely changed. I mean, think back. So many of us locked in our mortgages when rates were at historic rock-bottom lows, often below 1%. But the world we're renewing in today, it feels a whole lot different.
And this right here, this is the hidden cost of convenience. This quote gets straight to the point. Your bank is literally counting on you to just take the easy way out and sign that letter they mail you. But that simple signature, it could be an unbelievably expensive mistake. We're going to show you exactly how to avoid that trap.
So let's dive right into the big question. What is it that makes this renewal period so different? And why are so many people in for such a shock?
This chart really says it all. This is the rate shock in action. I mean, just look at the jump from that first bar, where so many of us locked in rates around 1%, to where rates are sitting today at 4% or even higher. That massive gap translates directly into hundreds, maybe even thousands of extra dollars on your monthly payment, unless you do something about it. But here's the good news. You are standing at a crossroads, and you have real choices. There are three main paths you can take, and believe me, the one you pick is going to define how much money you save. Okay, so here are the three main plays you can make. First, you can simply renew with your current bank. Easy. Second, you can switch to a totally new lender who's offering a better deal. Or third, you can refinance, which is basically starting a brand new mortgage, usually to tap into your home's equity. The most important thing is knowing you have these options. This is what I call the convenience trap. Look, renewing is easy. It's minimal paperwork, no fuss. But that ease comes with a hefty price tag. Switching lenders, on the other hand, yeah, it takes a bit more effort. But that effort is what unlocks the best rates on the market and the chance for huge savings. Remember, the path of least resistance is almost never the most rewarding one.
All right, so how do you actually unlock those savings? It's time to open up the Proactive Savers Playbook. We've got a few key strategies that are going to put you firmly in the driver's seat.
Strategy number one, and this is non-negotiable, you have to start early. I mean, 4 to 6 months before your renewal date. Don't just wait for that letter from your bank. Starting early gives you time, it gives you leverage, and it gives you protection. Most lenders will even offer you a 120-day rate hold, which is like free insurance against rates going up while you're shopping around.
Okay, this next one is absolutely critical. I want you to burn this into your brain. Never, ever accept the first offer. Think of that renewal letter from your bank not as a final price, but as their opening bid in a negotiation. It's almost always based on their high posted rates, not the super competitive rates they're giving to brand new customers. And this is why that matters so much. This chart right here is the secret that banks are hoping you never see. Look at that gap. The posted rate they send you can be worlds apart from what's actually available out there on the market. That difference is pure profit for them and a direct cost to you if you don't fight for a better deal. So, how do you find those better rates? Let's talk about two power moves. First, think about working with a mortgage broker. They literally do all the shopping for you. They have access to dozens of lenders, some you've never even heard of, and can often find exclusive rates. Second, think about a shorter term. If you think rates might actually fall in the coming years, a 2 or 3 year term gives you the flexibility to renew sooner and hopefully snag an even lower rate. And of course, there's always the big question, fixed or variable? As you can see here, variable rates are currently trending a little lower. That offers some potential for savings if rates go down or stay put. But your payment can change. Fixed rates are a little bit higher, but they give you that rock-solid certainty in your budget. Ultimately, it comes down to this. How well do you sleep at night with a little uncertainty? All right, now for what might just be the biggest game changer of all. There's a new rule in place that is basically a secret weapon for anyone who wants to switch lenders and get a better deal. First, a super quick refresher on the mortgage stress test. You've probably heard of it. It's basically a rule that forces you to prove you could still afford your mortgage even if interest rates were to go way up. For years, this rule was a huge barrier that trapped people with their current lenders. But that all changed. Before November 2024, if you wanted to switch lenders, you had to pass that really tough stress test. But now, for what's called a straight switch, where you're just moving your mortgage over to a new lender without borrowing more, that stress test is gone, vanished. This is a huge, huge deal.
So, what does this mean for you? In practical terms, it means freedom. Plain and simple. You are no longer locked in by that old rule. This change completely levels the playing field and gives you the power to shop around for the absolute best deal without worrying about those old requalification barriers. The handcuffs are off.
So, let's bring this all together. Your renewal is not just some boring piece of paperwork you have to deal with. It is a genuine opportunity to take control and make a real, tangible impact on your financial future.
And what kind of impact are we talking about here? What's all this effort worth? Well, by being proactive and following these steps, you could save anywhere from $5,000 to $15,000. And no, that's not a typo. This is real money back in your wallet.
That figure represents the potential savings over a pretty standard 5-year mortgage term. To put that into perspective, if you have a $500,000 mortgage, finding a rate that's just 0.5% lower can save you over $14,000 in interest. That's the power of shopping around.
So if you walk away remembering nothing else, please remember these key points. First, your renewal is an opportunity, not a chore. Second, start early, 4 to 6 months out. Third, never ever accept the first offer. Always negotiate. And finally, use your new freedom from the stress test to shop around and find the absolute best deal out there.
So I'll leave you with this final thought. Your mortgage is probably the biggest financial commitment you will ever make. Are you prepared to take control, put in a little bit of effort, and literally keep thousands and thousands of dollars in your pocket right where it belongs? The choice is yours.